It's Tuesday, February 7th, 2023, back for another daily review. Going to do it quickly tonight. And I'm going to start by talking about the opening range setup from today. Then I will go into a missed trade that is a good study. And then I will finish up by talking about a loss that I took. And then if there's time, I will go over how I got that loss back. So I think it'll be a good recap for tonight. So let's get into it. So what did we see at the open today? So I posted about it on my community channel and on my Twitter, but quite simply, so at 9:30, the market opens and we are just in a chop fest from yesterday and into Asia. When I woke up, I saw that Asia and London really was just totally sideways. I looked at the calendar, saw that Powell speaking at 9:40, I believe 9:40 Pacific time. So 12:40, it would be Eastern time. So real quick, if I just go to the SMT chart, we can see that the market opened. We make this move lower about 6 minutes or so, 5-6 minutes after the open. We can see we have the divergence. So this is a liquidity grab. We're nowhere at this support level from what I talked about yesterday, this volume imbalance, and we are at the previous week's high as well on S&P. So we do have this divergence. So I was open to getting involved, and we pushed up. So this looked good. This first candle, looking here at NASDAQ, this 937 candle, but I just didn't love this displacement. You know, we have the first high is right here, and it's just one candle. We're getting a lot of wicks. I just wasn't in love. I just wanted to see more of a displacement here. I just didn't think that combined with the fact that we had Powell speaking coming up, I just figured we're probably going to just stay range bound and it's more likely to be choppy. Now, I think if I did enter, it would have been something like this. Probably would have put my stop here, probably would have targeted, there was this volume imbalance above, that probably would have been my target. And then once we reached up into this area, you can see we have this imbalance to the left. We made a new high here. We're approaching 10 o'clock. Most certainly would have moved to break even anyway. And so we would have been taken out at break even most likely if I didn't take a partial. So very happy to have avoided that. And just to be a little bit patient and focus on patience. And we don't need to set up every day. We don't need to set up every session. So that was that. And then moving to the next opportunity. So actually, I'll go over two. So we had a move outside the opening range. So if we put on our DR, confirm break above, we come back into the range. We take the swing low. We fill this imbalance. So technically, this is a very nice looking scenario 3, but this setup would have occurred just minutes before Powell. So if you want to trade the news, that's fine. Sometimes the best setups set up right before a big news event. But when it comes to a Fed speaker or in this case, Powell, just like the new moves can be so volatile. Even if it did go up, it could have easily wicked down and taken me out at a loss greater than what I had allotted for with slippage. So if I go to the 1 minute, if you wanted an extra confirmation, you can see that we break below, take the liquidity, hit this imbalance, reclaim the level, come back down, form this high, take this high. We get this gap right here. Again, it wasn't super bullish above this high. So, frankly, the other reason why I didn't want to take it was because where you'd be buying from is just in the middle of this range. And if I'm going to be buying in like a very choppy environment, I would much prefer to do it at the extreme of the range, as you'll see later. So, whatever. Yes, it had a very huge move off the level when Powell started speaking, but again, no big deal. Didn't get involved in that. And then the trade that I wanted to outline as a missed trade that I think would have been a good trade to take is this move. So this move back down. So particularly on S&P, I liked how it looked. The premise of this trade would have been, if we just look kind of structurally, we can see that we have this high here. So we have this high up here, we make this low, we come up, we make a lower high, then we come down, make this lower low. And so off the level of the news with the Powell speech, we're coming into a relative premium. You can see here, we're coming into the 70% retracement level. But not only that, we have this up close candle on the 15-minute chart. I just love structurally how this looks. And then on the 1 hour, you can see that it is a fair value gap right here. Now, the first clue was seeing how the body of this first candle respected it on the close. So that's definitely what you want to see if you're trading off of a fair value gap, in my opinion. So that was one thing. The other premise was just that everyone's chasing this move. Everyone sees this huge spike up. People get antsy after this big range. They see it. They get excited. So, kind of like to trade against the sentiment, the retail sentiment, and coming into a premium. So this was a good first. It's beginning to shape up like there could be a setup here. So just that alone isn't a trade for me, although, maybe someone could have shorted this with the stop above the high. I'm not saying that wasn't a way that someone could have played it, but that what I wish I would have done. If you go to the 5-minute, you can see that we respected it on the hourly close, but we're also getting a lot of respect here on the lower time frame. We're just wicking through it, body's respecting it. We get this nice pin bar engulf confirmation order block right here. And then we come back in for the retest. Not only is this a big long wick, rejection wick on the 5-minute off of our key level, but what does it represent on the 1-minute time frame? That's what we talked about in the recap yesterday. The 5-minute wick, or a higher time frame rejection wick, can be our entry model very often on the lower time frame. So we have this intermediate term low, this low that hit off of this fair value gap. So we can see that this first fair value gap, pretty simply, after we tap into it here, comes up, we lose it. So now we expect the retracement or outright reversal for that matter. So we get our displacement, we get a retest of this order block right here. That could have been an entry, or I believe a little bit of a gap ever so slightly right here as well. So you can see we get that imbalance. It's just confirming on all the time frames. So we get the 1-minute structure break, displacement, taking out this low. We have the 5-minute candlestick rejection with the wick and the engulf below. We have the hourly respecting the fair value gap to the left. We're in a premium. We have these relative equal lows. We have the sentiment of people chasing the news. So I think there's a lot in its favor to, and also you can see in the 15-minute, of course, we're respecting as well. So I think there was a lot in favor of taking a short. So I logged it in my journal, in my notebook, as a missed trade. And I also noted the time and the news event that preceded it. So all of that factors in to the narrative and to the idea behind why this would have been a nice trade. And so it did make a new low. You could have just targeted to, this low. And then what did we get after that? So this brings me to my next point, which is the trade that I took a loss on the first attempt. We're back to our side-by-side. So now we're back in our support level, the lower extreme of the range, our high time frame level. And then we, again, took out the lows on S&P and we made what looked to be at the time a higher low on NASDAQ. So we have the liquidity grab with SMT divergence. Even though it's not happening at the opening range time period, the same logic can be applied in other situations. So again, we've had the news event. We've had this big rally up. What is this? A false start. The market reacts very bullishly off the news. Everyone chases it. Market comes all the way back down, takes out the stops here. We have the divergence. We're at a high time frame support. And so now it's just about, do we get the green light on the lower time frame? So if I look at NASDAQ, that's the one I preferred. because it was stronger and because we were at this daily volume imbalance still. I'll show it to you again if you don't remember it from yesterday. So we're at this daily volume imbalance. And so that's what this blue level is. We've been bullish. I said also I didn't want to be guessing when the top was going to come in. So my setup, which I posted right here. So I got in basically on this gap. Now, mistake one, if you want to call it mistake, was did I need to have my stop right here? I guess I did because I was only aiming at first for this imbalance right here because I didn't know what was going to happen. But I got taken out. Obviously, if I went below the low, it would have been kept in. But I think the bigger reason why this loss was because of time. I think if I had waited closer to 1 p.m., which is a time where we're known to get a turnaround around that time, I think that would have been a higher probability time, even if I didn't even take a trade off of this area, because I think I don't really see a great setup here for me. I think once we reclaim up here, I'll show you where I got in. I think I probably should have just waited for the setup that I ended up taking, which is around here. I'll get into it in a second. But yeah, it was the right idea. The idea is, this is essentially a false start. As I mentioned. And so a false start doesn't have to apply for the type 3 opening range, and that's it. It can apply for news events. If we go back to last week, I think I talked about this as well on my Twitter and on my YouTube channel with FOMC. The rate release was around here. We get the push up. People are buying. Then after the press conference, we get this move down. We take out that low off of that initial rally. So that's the false start, liquidity grab, and then the market flies after that. If we even go back to earlier in the week and we look at, and maybe I'll do an in-depth video on this. So the week before on just different types of false starts, the concept is the same. So if you can apply it to the weekly range as well. So if you look at on this week, January 23rd, we have Monday low. You can see at the open, we have these very clean lows. Market does not do any type of retracement. It's just a straight vertical move. Monday, big Monday range. What ends up happening? Everyone's buying, expecting that the low of the week is in. The market chops around, moves higher, breaks this high even. So people become more confident that this low is in. The market comes all the way back down. This, the way I read the market, is just a false start. What happens? The market comes all the way back down, takes the liquidity here, then does the real move back up. And just like the idea of market structure, everyone thinks of it as just higher highs, higher lows, higher highs, higher lows. But what you don't really realize is that, this is like the textbook oversimplification of structure and of trend. But if you really were to dissect that, the way it really tends to work is you get like this. So it is still making higher highs and higher lows, but it does it in a way where you get these little runs of these what appear to be, the lows, and then you get the real move after it, and you're still then getting the higher highs and the higher lows. It's just you just don't pay attention in hindsight really of all of these kind of liquidity grabs, and so you don't even really mark this one. You mark this one, and then you don't mark this, you mark this, and you still see it as higher highs, higher lows, but you always tend to get, not always, but you often tend to get trends that move and behave in ways like this as it moves to a higher time frame target. So that's why I look at these false starts. That's why I call them false starts, because the real move, the market does seem to want to go up, but it doesn't want you in when it's going to make that move. And this is how it knocks you out before it moves higher. So that's how I read those false starts. So that's what basically happened here, even though I got knocked out, even though I got taken out too early as well. My entry was okay. But so the lesson that I think I learned from it as well is not only should I have entered closer to the 1 o'clock Eastern time period, but I should have waited for this high to be traded through. Why? Because my entry was here. So market made a low, came up, made this high. Usually the market's going to attempt to make a higher low. It's not always going to make these very, very steep V reversals all the time. And so what are we coming into here? This is still this is going to be seen as a short-term resistance area. And so people are selling off of this break and retest. So break through this low, comes back, retest it. And people who see this as a breaker or market structure break, but the narrative is overall bullish for the reasons mentioned. And I should have waited for this kind of level to get dealt off first, the liquidity here to be dealt off, and then to show the bullish intent beyond this high. That should have been the trigger to look for longs, in my opinion. And so ultimately that's what happened. So we pushed up. I saw that we created this gap here. I thought by here it became very, very likely to me that we were going to reach for this high, this buy side liquidity right here, because then it became more clear as well that this was looking that this false start was definitely going to come to fruition. Now we're trading inside this breaker. So as ICT teaches it now as well, it's sort of like a anticipatory breaker. This whole up move, you can combine these candles. We have low, high, lower, low, and now we are impulsing through this up close candle. Now we have this fair value gap here on the 15-minute. We have it on the 5-minute. Right, these down close candles. We're seeing this price run, this bullish order flow. And so we look for bullish PD arrays to get involved in. And so I got in around here, saw that we were coming into this fair value gap right here. I took 2/3 off my trade here. Price came back down, took me out at my entry, a break even on that final third. Then I saw all we were doing here was tapping into that. I think this was when it tapped into it on the 15-minute. We have this short-term low. We have this gap. Price shoots back up. I originally had my order set to go in here in this balanced price range. Of course, market didn't come into it. Saw it push up above now this level, down close candle. That made me think that, okay, this is a market maker buy model too. If you go back down onto lower time frames, just you can see if you don't know the market maker buy model. Original consolidation, decline, come down, take the liquidity, smart money reversal. And now we're coming back up, reclaiming these levels on the way back up. And so we expect this gap to stay open once we push above here and create this gap. So I waited for this candle, and then once this candle wicked below into here, right around here, I bought back in, not with the full position, but just with that final third, that final runner. And then I just let it go, and I was going to just trail it. Probably should have just closed it at the high. But what ended up happening was I was like, what if this really runs towards here? I just wanted to leave it as a true runner, and I was just going to trail it. And so I trailed it once this candle closed, and then we got this big rejection. I just moved it to right below this candle, and that's when I got taken out. So I gave up a little bit by not just closing it at the high. But I wasn't getting any bearish signals, and with this close, I was more than happy to just see what happened. You could take a swing projection almost and go from low to high. Of course, time of day wasn't really supporting it, but this would have been a 1-to-1. Not that it would have hit that before the close, but sometimes you get crazy rallies. You have the low resistance liquidity run here, possibility, these lower highs here. So I just kept the runner open, but all in all, it was good to kind of get it back after taking the loss here. It does kind of suck sometimes to be taken out of a trade that you were fundamentally still right on the overall idea. And so it's hard not to get a little FOMO sometimes. So you're like, I was right on my analysis. I was just a little off on my execution. I actually did close my computer for a little bit, but then I came back and saw, what was happening, and glad I, stuck it out for a little bit and wasn't too emotional about getting back in. I was just trying to be logical about it and just say, hey, this was still a valid bias, still a valid idea, and we have an entry. We haven't hit buy side yet, and we still had some time left in the day. And so that's what happened. So that's my day on NASDAQ and S&P, and just always journaling, always trying to get better every day. So that's it for tonight's recap. Hope it wasn't too long, and I will be back again soon. Thanks. Bye.